We'll discuss everything about this trade I placed in gold. It was a reversal trend. We'll explain it and understand the reasoning behind it, why I took this particular trade. As you can see here, the price was moving in a 300-point range. I had taken an additional short position and I closed it out at a much lower level. But we'll see the reason behind it, what confirmation was in order flow, what confirmation was in the book. We will try to understand all these things here. First, let's move to the technicals. Technically, it was simple. The market went up all day. A lot of liquidity is pending below, so there's a chance they could dump at the open. Secondly, in silver, we saw the market forming SMT slowly approaching the high. I received an indication, I'll show it to you. Within the order flow, when New York opened, the market initially took out the high, and here we saw a pretty good amount of selling activity, and the buyers were clearly appearing to fail. All right, similarly, once again, this was around 7 or 8 o'clock in the morning. At that particular time, once again, there was a major attempt by the buyers, and an effort was made to break through the resistance level. Again, within this, we observed a very strong attempt from the buyer's side, but they are encountering resistance. They are being absorbed. Okay, if we talk about silver, we saw the same scenario there too. The market made a very significant attempt to buy, but it ultimately failed. A substantial selling pressure emerged in silver, and it has held its ground. So what are the chances now that SMT is well formed? It could potentially continue its downside movement. Now, I'll tell you something even more encouraging than this. In that same book, we were seeing that, sir, despite your previous resistance, that liquidity is still lying there. And this one that opened in New York, if we fast forward this a little, we'll observe its volume and liquidity are building. So what are the chances the market can hunt it again? Okay, if we discuss long-term orders, we were seeing that the lows, right, below the 90 price point, we were noticing the market could go down. How far can it go? Up to your loss, okay, meaning what we're understanding as liquidity, the book was confirming to us that is your liquidity. If we fast forward this, we see all the action unfold further. And in this, I will show you how this whole scenario played out. And here you can see all your planning is happening the 8 a.m. one, right? Sellers enter the market very aggressively. And after this, you see a very dramatic shift. You can see the downside, right? And this goes straight down and stops around the 90 mark. I'll show that to all of you as well. Okay, you can see it here. So in this book, that very thing we were trying to understand, it was confirming that these areas you're creating, you're not the only one making them. Large players are also there. He's also interested in precisely the same way. All right, so this is a very significant advantage. And when you acquire both of these edges, the aggressive and the passive ones, then it tends to play out extremely effectively. All right, so from this video, I hope you've gained some valuable insights. See you in the next video.